weekend. Ira Epstein with your agriculture wrap-up, and this is for Friday, the 6th of March, 2020, and we're just after 4:30 p.m. Well, the place to hide has been in the agriculture sector. I say hide because it's too wild in the stock market. You've seen a collapse on interest rates, oil market in a state of collapse. Would you believe you're back to $41 a barrel plus in crude? And in the Brent, you're down to 45.16. Look at gasoline prices. Look at what's going on in nat gas. Remember, China, big nat gas consumer, not yet buying in the marketplace. And for us, with the OPEC collapse, the differential between the price of Brent and WTI, pulling them both down really hard. Now, what has this done for our demand for our grains? Well, our farmers are about to go into the fields. Ira, you're nuts. Look at the year where blah, blah. It's March 5th. Field work's going to start in many parts of the country. We're going to see that begin. And lost in all the noise of COVID-19 has been what's going on. Lost in the noise is the fact that we have our freezers. Yes, cold storage facilities bursting because we don't have export business going on, and prices have been coming down and down hard. Now, as you look at the soybean market on a monthly basis, it got itself married to the 18-month moving average, and it's just sitting there. That's neither bullish nor bearish. It's okay. Prices are holding here at the 885 level. As you can see right now in this chart, what would worry me on a weekly chart is getting under these lows on a closing basis, taking out, let's call it that 865 level. If that occurred, you might be setting yourself up for a move back here into the 830 zone. What about to the upside? There's nothing here that I think helps on the upside much. And the reason is you've got a pattern of lower highs, I've marked them with the red arrows, and you have a lower low. So even if you rally here through 902, you end up with a lower low and a higher high. Okay, I know that's a lot of jargon talk, but traders look at it. The next thing I'm looking at are moving averages, and admittedly, they're a backward indicator. They're not going to tell you what's necessarily going to happen going forward, although they do help in that, because they represent resistance points when you're under them as the market's lifting back. So this market's now fighting a battle at the 100-week moving average of closes to the 18. To at least negate the downtrend, you've got to take out this last rally high, and that high right here was the 902 area, and as it turns out, that's getting very close to where this 18-week average is going to be, because it's going to drop come Sunday night when we reopen. How do I know it? The slope and the days the higher numbers you're losing here. And it's moving at about 3 cents at a shot. So it's going to drop down probably near 901 or so when we reopen. That's my educated guess. In Bollinger Bands, you know what those are? It's an algorithm designed to keep the market trading within them 95% of the time. A lot of times you've got to look at the pattern that they're giving you to know what to do with them. And right now we have a market that's really been fairly sideways. It's kept the bias down because you're under the 18-week average. And each recent weekly test of the Bollinger Band has been a lower test, but in the sense that you've bounced away from them. It's still a downtrend. So if you drop again, 862.5 is the next support zone off those bands. When I look at momentum on a weekly chart, I don't look for overbought, oversold. I just look, is the momentum up, down, or sideways? It's down. I have a downward momentum. The bias is down. Next support, if the market breaks down, is 862.5, and we're testing resistance from 895, let's call it to the 903 area. In the meal market, sideways action. Look at this. From a narrow sideways action, like we did here, events occur. It's because you're building energy within that band and it's going to burst out one way or the other. Admittedly, it tried the downside, didn't go anywhere, went all the way back, knocked out the shorts, and just widened the band further. And we've been in that play since last spring. That's when this all began, and we're still basically in those prices. I realize people talk to you, all prices and grains collapsed. Folks, a year out, back here, you're not much different than you are right now. I'm not buying that argument. Soy oil has taken a recent big hit. This was the area during the summer when we kept hearing that China needed oil. They were buying palm oil in big masses. Their economy was going great. That world changed with several events. First off, you began in January with the COVID-19, and that impact in China hurt grain exports. Remember, we were negotiating the trade deal and all. Nobody's going to hold China's foot with this world event taking place to the fire that they didn't buy the grains from us. If you believe that, get serious. I mean, it's not going to happen. Are we going to have a deal? Yes, they'll come out of the melees. We will. Viruses come and go. They can repeat every year, but we'll get vaccines for them. That's how the influenza works in America, and more people die of that than these other diseases. But admittedly, this is scary. I get that. Corn market. Do you not see the sideways churn that's going on in the market? That's where you're at right now. Churning back and forth in a market that is not in a trend. You had one test in all this time. Remember, this is a weekly chart. You have to go back to June of last year when you last hit Bollinger Bands. You just hit it and you turned away from it. This is a churn. And while people say, oh, the grain prices have collapsed, here I'll argue they're right. Corn was up last May, sitting here at $4.56. We're not at $4.56. We're 80 cents lower. I'll accept that argument, hand down. Wheat, though, no. Wheat's still up from where it was last spring. Got it? So this market's okay, but in a downtrend. Lower highs, lower lows. If it continues down, the 507 in a quarter, right into this whole area. This is what I'd be looking for, the support, the lower Bollinger Band and the 100-day average of closes. Sugar's gone into a tailspin. Momentum down, the market's gone instantly from the 1,500, near 1,600 level, 1,590, all the way down here to 1,295. Market's tail spinning. If it wants to continue washing out, you could be targeting the 100-day average in this number. On rallies, look for resistance back at the 18-day average of closes, the 1382 level. In the coffee, I'd be nervous a little about coffee. Why? I think this was the rally as China was getting better. I had done it on the daily tapes telling you. I want to see that COVID-19 doesn't go through America and do to us what it did in parts of China where, be it Beijing, Shanghai, Wuhan, all these areas, nobody's on the street. That will hurt the demand for coffee, be it in Europe, be it in the US, whatever. So be careful right here. That market's now got to play with this, and this is a big week for us because all these test kits went out. Come early in the week, we're going to hear a lot of word on how many more cases or lack of cases those test kits are showing up with. Cotton, export market, came down for the first time last week, hit the Bollinger Band, and you're getting a little bit of a bounce. It's certainly not a turn away. Downtrend, hit its number. Some took money off the table, I think. Now the question is, does it have any more downside to it? In the cattle market, a collapsing market, that's what you can say. But it fell apart last week, and what it's trying to do is work back over that Bollinger Band. Down only 7 cents for the week. Big move, any way that you want to cut it. It's a big break in the market. In the hog market, trying to hold now the 18-day average of closes. So if you can get this market over this high, and that high was 68 and a quarter, then I get interested in the market. Now let me give you the flip side. If this market gets under 61.52, be careful. You continue the downtrend and you start targeting the 5,500 level. You have a bit of divergence here. You have momentum up, price action. The close was 65.92 over the 18-day average. The resistance is 67.05. That 68 and a quarter area is very important. We need to see that taken out to turn the trend of this market. At that point, until you get back under this low, I'd be saying, nah, I think the market made its turn. We'll see if that happens or not. You know, one of the things I like to do is teach, and I get up early to do it. In these markets, try to imagine, I'm recording for my subscribers a video that they can see on their phones, We give them, and my subscription to my research, they get this. They also get to see a video each morning. I record it about 5:40 in the morning. The reason I do it so early is I want to cover 40 markets and give you an idea as to what's going on in them in a synopsis form, sector by sector in the futures markets. So you have your cup of coffee. I'm going to do 40 charts, and they're going to look this way. They're going to be a different background that you see here. I'm going to cover with you touch of the fundamentals, because I know what's been going on in Asia. I've read about it. I know Europe. If there's a big grain report, something else, or meats, I'm talking about it at that point, and I'm covering these charts. And I can do more than I do here. Because it's a user ID and password based, I can say, I want you to buy here. I want you to sell here. Here's the stop order. Here's what I think. Shucks, I was wrong. Darn it, we hit that one. Many different ways that we're talking. But you get all that, and that's the idea. It's in your hands, certainly, before the meat markets open. I have this published typically before 7 a.m. for your viewing. So I'm recording about 5:40. By the time I publish, maybe 6:15 in the morning, 6:30, assuming nothing's up there. So let's assume you just want to know about the meats and grains. Okay, there's going to be a slide bar. Just pull it. It's going to light up, meats, grains, everything you want. On the side, if you're on our website, it'll tell you the section as well. You can just click it. I make it so you're not wasting your time, but I'm trying to offer you trade ideas, a touch of what the fundamentals are showing. If that sounds like something that might be of interest to you, it's not expensive. $7.95 for the first 30 days. After that, you can either go another 30 days, it's $15, or a yearly subscription. You pay up front, but it's $13. Think of the price of a ticking corn. That's about what I've priced this at. So how do you find out more about it or subscribe to it? Go to our website under the word research. It'll take you the rest of the way. I'm Ira Epstein. You have a good day. Talk to you on Monday.